Grandfathering provisions. A detailed analysis of regulatory exemptions. The foundational principle of non-retroactivity. A grandfathering provision, often referred to as a grandfather clause, stands as a fundamental mechanism within the legislative and regulatory landscape. At its core, it is a deliberate legal exemption that allows specific individuals, entities, or activities to bypass new laws or regulations, permitting them to continue operating under the rules that existed previously. This principle is not merely a courtesy, it is deeply rooted in the concept of non-retroactivity, a cornerstone of legal fairness which dictates that a person should not be penalized or disadvantaged by a law that was enacted after their relevant actions took place. In essence, the provision serves as a protective bridge, safeguarding established interests from the sudden and often detrimental impact of regulatory change. The necessity of such clauses arises from the constant evolution of society and technology, which requires governments to continuously update their legal frameworks. However, without a transitional mechanism like grandfathering, every new regulation, from complex environmental standards to simple zoning changes, would require existing operators to halt operations, dismantle infrastructure, or immediately incur massive compliance costs. This sudden mandate would be economically disruptive, legally contentious, and, frequently, deeply unfair to those who acted in good faith under the previous legal structure. Grandfathering provides the crucial element of stability, allowing progress to be made without punishing prudence. The mechanics of regulatory exemption. The implementation of a grandfathering provision is highly contextual, varying significantly depending on the nature of the law it amends and the policy goal it seeks to achieve. These mechanisms are rarely uniform and can be categorized by their duration and scope, offering regulators flexibility in managing transitions. Permanent exemption. One common mechanism is the permanent exemption, typically seen in areas like professional licensing or historical zoning. For example, a veteran engineer licensed under a previous, less stringent qualification exam may be permanently allowed to practice, while new applicants face updated, demanding requirements. The exemption is tied to the individual's existing status and remains valid as long as that status is maintained. Temporary exemption. Alternatively, a temporary exemption provides a grace period, often tied to economic life cycles. This might exempt a piece of industrial equipment from a new safety standard for 5 years, the typical remaining useful life of the asset, after which compliance or replacement becomes mandatory. This approach acknowledges the investment cost of the asset and allows the owner to depreciate it fully before incurring the cost of compliance. Strict limitations. Furthermore, provisions often come with strict limitations. A common limitation is the prohibition of major change or renovation. In property law, a grandfathered structure might be allowed to remain a certain height, but any substantial rebuilding or expansion would immediately revoke the exemption, forcing the new structure to comply fully with current zoning codes. This ensures the grandfathered status is maintained only for the existing structure and its current level of use. Application in zoning and property law. One of the most visible and widely understood applications of grandfathering is in the realm of municipal zoning and land use. When a town rezones an area, say, changing a commercial district into a residential one, businesses already operating there would otherwise be forced to close. The grandfathering provision addresses this by creating non-conforming uses. A long-established dry cleaner in the newly residential zone is allowed to continue its commercial operation, often indefinitely, because its use predates the regulation. This protects the business owner's investment and continuity. However, this protection is delicate. The non-conforming status usually carries severe restrictions. The dry cleaner might be prohibited from expanding its building, increasing its operating hours, or switching to a different commercial activity, e.g., converting the dry cleaner into a convenience store. If the business closes for a set period, the non-conforming use is often deemed abandoned, and the property must then conform to the residential zoning upon resale or reopening. This delicate balance ensures that the regulatory goal, a new residential neighborhood, is achieved over the long term, while respecting immediate property rights. Grandfathering in environmental regulation. The deployment of grandfathering clauses in environmental legislation is highly significant and often subject to intense public and political debate. When governments mandate cleaner air or water, they typically introduce stricter standards for emissions or waste disposal. Applying these standards retroactively to all industrial sources can be economically devastating, particularly for legacy industries with decades-old infrastructure. For instance, older power plants might be allowed to operate under less stringent, legacy, emissions standards than newly constructed facilities. The rationale here is predominantly economic. The cost of retrofitting obsolete infrastructure with modern pollution control technology can often exceed the cost of building an entirely new, compliant plant. A total immediate ban might lead to power shortages or massive energy price spikes. However, environmental grandfathering provisions are frequently criticized because they inherently perpetuate higher pollution levels. To mitigate this, environmental exemptions are often temporary or contingent. Companies may be required to commit to phased reductions, or the provision may be triggered only if the plant does not undergo any modifications that could be construed as extending its operational life. The policy aims to allow the grandfathered assets to run their remaining course while ensuring that all future developments meet the highest environmental bar. Safeguarding professional credentials and expertise. In sectors governed by professional certification and expertise, grandfathering provisions maintain workforce stability and recognize practical experience. When medical, legal, or financial professions update their licensing requirements, perhaps increasing the required level of education, adding new specialization exams, or mandating more rigorous practical training, the existing pool of licensed professionals is grandfathered in. Current practitioners, who may have received their license decades ago under simpler criteria, are not suddenly required to return to university or retake outdated examinations. Their existing license is validated by their years of practice and established compliance with the rules of their time. This prevents mass disruption in essential services, ensuring that doctors, lawyers, and engineers can continue to serve the public without unnecessary administrative burdens. New entrants, however, must meet the updated, more demanding standards designed to improve the profession's quality for future generations. The complex landscape of tax grandfathering. Tax law is another area where grandfathering provisions are routinely utilized, often in response to reforms concerning capital gains or complex investment structures. The goal is straightforward: to ensure that newly enacted taxes do not unfairly apply to financial gains that were already realized, or to investments that were made before the new tax regime was announced. Capital Gains Tax, CGT. A classic example involves changes to capital gains tax, CGT. If a government introduces a tax on certain long-term assets that were previously exempt, applying the new tax to the entire gain would tax the appreciation that occurred before the law was even contemplated. This is considered unfair and can lead to immediate sell-offs as investors scramble to lock in gains under the old, favorable rate. The grandfathering clause mitigates this market panic by adjusting the cost basis of the assets. Detailed case study: India's long-term capital gains (LTCG) tax. The introduction of the long-term capital gains (LTCG) tax on listed equities in the Indian Income Tax Act via Section 112 in 2018 provides a textbook example of a fair and carefully structured grandfathering provision. The context: prior to 1 April 2018, LTCG from the sale of listed equity shares and equity-oriented mutual funds, held for more than 1 year, was entirely exempt from tax. This zero-tax regime was a key policy measure designed to encourage long-term investment in the capital markets. The change: the Finance Act of 2018 introduced a 10% tax on LTCG exceeding ₹1 lakh, approximately $1,200 annually. This change was politically sensitive and threatened to disrupt the stock market, as investors would immediately be taxed on massive accumulated gains. The grandfathering mechanism: to protect investors from being taxed on gains accrued before the policy change, the government implemented a provision that effectively exempted all appreciation up to a specific date, 31st January 2018. This specific date was chosen as the cutoff, as the policy was announced shortly thereafter. The adjusted cost of acquisition, the grandfathered cost, is calculated using a formula. It is the higher of the asset's original purchase price or its fair market value, FMV, on 31st January 2018. However, this adjusted cost cannot exceed the final sale price. This rule ensures that only gains realized after 1 February 2018 are subject to the new 10% tax, effectively insulating all prior gains from the regulatory change. This mechanism was crucial for maintaining investor confidence and ensuring a non-disruptive transition to the new tax environment. The grandfathering debate: pros and cons. While grandfathering is an essential tool for smooth governance, its use is often subject to intense scrutiny and debate, particularly regarding the inherent tension between fairness and progress. Arguments in favor: the pros. The primary benefits include promoting economic stability and policy predictability. By assuring existing businesses and asset holders that their established compliance or investments will not be nullified overnight, the government minimizes market shock and reduces the likelihood of costly and prolonged legal challenges. Furthermore, it embodies fairness by respecting the legitimate expectations of citizens who complied with the law as it stood at the time of their commitment. Arguments against: the cons. Critics argue that grandfathering provisions create a system of regulatory complexity and inequality. By creating dual standards, an old, potentially obsolete standard for existing entities and a new, better standard for new entrants, they can slow the pace of necessary public improvements. An environmentally grandfathered factory, for example, continues to pollute more than its modern competitors, creating a competitive disadvantage for new compliant firms and hindering the overall public good. The creation of such two-tiered regulatory systems can also be a logistical nightmare for enforcement agencies. Historical origin and modern terminology. The history of the term grandfather clause is critical, as its original meaning is deeply tied to one of the most shameful periods in American political history. The term originated in the post-Civil War Southern United States as a direct means to disenfranchise African American voters. After the 15th Amendment granted voting rights to all men regardless of race, several Southern states introduced new, restrictive voting requirements, such as literacy tests or property ownership thresholds, which were impossible for newly freed slaves to meet. However, to ensure white citizens who might also be poor or illiterate were not prevented from voting, the grandfather clauses were added. These clauses exempted anyone from the new restrictions if their ancestors, specifically their grandfathers, had been entitled to vote before a certain date, typically 1 January 1867. Since African Americans were enslaved and legally unable to vote before that date, this provision effectively barred them while granting automatic voting rights to almost all white citizens. These overtly racist clauses were eventually challenged and declared unconstitutional by the U.S. Supreme Court in the landmark 1915 case Ginn v. United States. Although the legal mechanism itself was struck down over a century ago, the term remains in common use today. It has been largely decoupled from its original, hateful context, and is now used in a purely descriptive, legal, and general regulatory sense to describe any clause granting a historical exemption from a new rule. Conclusion: balancing protection and progress. Grandfathering provisions represent a pragmatic and legally necessary compromise between the need for governmental progress and the ethical imperative to protect established interests. They function as a legislative shock absorber, preventing the legal system from unfairly applying new burdens to old compliance. While they sometimes slow the full realization of new policy goals, whether in environmental protection, professional standards, or tax fairness, they are vital for maintaining economic stability and respecting the principle of legitimate expectation. The application of these clauses requires careful deliberation to ensure they do not become permanent obstacles to necessary societal evolution.